Hi, this is Jake from QuantumFlow, and today is Wednesday, April 3rd, 2024. Please be sure to like and subscribe to our YouTube channel at QuantumFlobyJTNC to receive daily market recaps. Today, SPY opened down slightly at the all-important 518 level and quickly rallied to 521 before an afternoon sell-off to close basically unchanged. On the day, up 11 basis points. Treasury yields were unchanged, and Chair Powell reiterated that rate cuts were in play for 2024, although he did state that cuts would only come after there was sufficient economic data to indicate the rate of inflation was headed toward the Federal Reserve's 2% target. Commodity prices, and in particular crude oil, continue to rally, and we are seeing the effects of this rally at the gas pump, with prices now over $4 a gallon in most states. ISM services came in stronger than expected, and ADP non-farm payroll also exceeded expectations, indicating a strong economy, further complicating the need for the Feds to do anything with interest rates. Volume was light at 59 million shares, and the market is basically stuck in a range between 518 and 521. We mentioned in yesterday's video that we expected the market to be range bound and that the bulls needed to recover 520 to continue the uptrend. While the market attempted to get above 520 at the close, it settled in at 519.41 and put in a small green day, and the pattern of two red days followed by a green day resumed. We also mentioned yesterday we expected the market to test 518 early on in the session, and that it would hold. The market would make a solid attempt to move higher, which it did in the early morning hours. This is precisely what the market delivered on Wednesday, and again, what QuantumFlow was able to predict with a high degree of accuracy what the market was likely to do the following day. We continue to believe the market will trade between 525 and 518 and scratch. We continue to believe the market will trade between 525 and the 518 level. We remain below the lower trend channel, which is starting to become problematic for the bulls. While our models still project higher prices to as high as 527 this week, if the market stays below the trend channel for another day or two, the channel will be redrawn with a lower boundary suggesting the top is in the short term. Tim posted in the pre-market at 8:17 a.m. that he thought the market would gravitate toward 519 and push through it to his upper target of 521. He also stated without supporting the volume, the move would likely stall and the market would then gravitate back down toward 517 in a somewhat disorganized fashion. Again, Tim nails it with the call early on, with the market moving higher to 521, only to fail on low volume and drop back to 517.77 before bouncing into the close. The markets continue to trade in line with Tim's pre-market view and repeat daily. Learn to incorporate both the nightly post-market recaps and Tim's pre-market analysis to provide yourself with an actionable and tradable edge every single day. We guarantee your brokerage account will love you for it if you follow along religiously. We continue to remain bullish and expect to see higher prices later on Thursday and Friday, although this week's high looks to be limited to 523. We mentioned yesterday a new all-time high was looking unlikely for the week, with the market trading below the lower trend channel that has been in place since October. It is possible the market is preparing to roll over and test some lower price levels, such as 504. Longer term, we continue to buy all dips as we still believe we will see higher prices, and although it's unlikely we see that this week, next week is looking a bit more favorable for new all-time highs to as high as 528, which would put the market back in the current trend channel. But again, dealers are buying loads of downside protection just in case the market decides it's time for a breaking trend. For Thursday, our models see prices rallying to 522 before finding any major resistance. The model does not have an early morning view suggesting any weakness, so it's possible in the overnight session, prices grind higher to get above 520 and stay there for the day, attempting to reach 522. There aren't any major economic reports tomorrow, and it's likely the market trades in a range between 520 and 522 all day, waiting for Friday's important jobs report. There are additional Fed speakers tomorrow, starting at 12:15 p.m., but as we said yesterday, they will likely support what Chair Powell said today and keep the Federal Reserve's message consistent. QuantumFlow projects SPY's range for Thursday to be 517 to 524, narrowing significantly, which will bring in less volatility and more range trading. Sell the highs and buy the lows will be the proper course of action for Thursday. QuantumFlow's weekly lineup service is still long calls on Snap and WBA, which expire on Friday. WBA continues to deteriorate, and we give the odds of any success of this trade virtually zero. Snap saw a slight rally today, and we believe we'll be able to recover some of the income from this trade, even though it may end up being a losing trade. QuantumFlow's play of the day service entered an overnight trade today on SPY, buying the 518 calls for $1.48, which it closed less than 15 minutes later for $2.27 and a greater than 50% profit. This happens sometimes on these overnight trades, even they are 1 DTE and designed to be held overnight. But anytime the model can bank 20% plus intraday, our model does recommend we lock in profits. Anyone trading multiple contracts can surely take 1 or 2 off intraday and hold the rest until the next day for additional profits. Dealer positioning for Thursday to the upside has dealers buying 520 calls while selling 522 calls, implying a slight rally tomorrow, but to 522, given they are selling far more calls than they are buying. To the downside, dealers are buying 519 to 515 puts in about 1.5 to 1 ratio to calls being sold, implying some concern over lower prices, although this type of slight imbalance is more indicative of positioning for a narrow range day. But as we've said for several days, once 518 fails, expect to see 515 before finding any material support. We continue to recommend buying protection for any long portfolio. Looking out to Friday, positioning is similar to Thursday, with dealers buying 520, 521, and 522 calls while selling 523 and higher calls. This implies a slight rally the rest of the week, but with a ceiling at 523. They have also added more downside puts, buying 519 to 510 puts in a 4 to 1 ratio to the calls they are buying. Certainly they are ready for a strong jobs report on Friday, which could sink the market, and are positioned to capitalize on any material pullbacks. Deal positioning changes each day, so check in with QuantumFlow pre-market and post-market to better understand how dealer positioning will affect the day's price action. Tim posts his analysis of the pre-market by 9 a.m., and we provide these market video recaps typically by 9 p.m. Eastern Time every night. At QuantumFlow, we strive to deliver actionable intelligence you can use each day in your day trading. Good luck and good trading.